Hey guys, welcome back to the channel. In this video, I'm going to break down how much high yield ETFs paid me this week in distributions. I'll also provide some market commentary as we head into September. As always, don't forget to smash that like button if you like this type of content so the algorithm guys know that I'm here. Hit subscribe if you're new so you're alerted every time I publish a new video about stocks, investing, finance, and news. But before I get started, I have to hit you with a quick disclaimer to appease those YouTube gods. This video is for entertainment purposes only, not financial advice. You should always consult a professional. With that out of the way, guys, let's head into the video. All right, so first thing we're going to cover is how the week has been going. So this week has been very rocky, to say the least. All right, a lot of whipsawing action going on. We had NVIDIA that came out with their earnings, and even though they did really well on earnings, seems like the street didn't like that they missed on their data center segment, right? And they saw that as weakness, and NVIDIA promptly sold off, and a lot of the high beta stocks also sold off as well. So you guys can see right here, we had that big sell off, and then it seems to have recovered. That was for NVIDIA anyways, and then this week we kind of ended in the red, but the S&P 500 ended in the green for the month, which is a good sign. But anyways, we'll cover all that a little more later. The ETFs I'm going to be covering in this video is going to be PLTW, NVDW, HOW, XDTE, and MSTW. All right, first one up is going to be the Robinhood MicroStrategy or Strategy Weekly Pay ETF. All right, so I hold 1,077 shares of this ETF, and it paid me out $328. So not too bad. All right, again, there has to be bullish momentum behind these stocks in order for the payouts to be better for these ETFs. All right, so you guys can see last week it paid me out $500. This week, $328. So still not too bad. I'll take it. For the Robinhood Weekly Pay ETF, HOW, I have 567 shares of this ETF, and it paid me out $598. So not bad there. NVDW, all right, which is for NVIDIA. This one I have 1,000 shares of, and it paid me out $452. For PLTW, which is the Palantir Weekly Pay ETF, I have 1,100 shares of this, and it paid me out $580. All right, and finally, I have XDTE, which is the S&P 500 zero DTE cover call strategy ETF. All right, so this is not a leveraged ETF like the other ones. I have 1,614 shares of this, and it paid me out $342. So not a bad week, all things considered. And you guys know that I don't use, a fancy spreadsheet, for these dividend payouts. Instead, I use a very high-speed, robust notepad. So let's hop over to the notepad and take a look. So I had some subscribers requesting, how much of a return on equity I'm making from these distributions. So I included them here. For PLTW, return on equity, I made 1.34%. For NVDW, 1.08%. For HOW, 0.07%. MSTW, 0.04%. And XDTE, 0.04%. Now, the thing about this, all right, the thing that I have to explain about this is the distributions for these ETFs, they change every single week, all right? And again, since we're heading into September, we already went through August, which is typically a down month. Now we're heading into September, which, in my opinion, is probably just going to be as worse as August. I suspect that these payments will drop or stay kind of flat throughout the rest of September. And the reason is because of, everything that's going on in the macro. All right. We still have, the FOMC meeting that's going to be taking place, but September is still typically a down month. So we'll see. But anyways, one thing I did not cover, and I'm covering it here now, is week 0, right? So August 1st was actually a Friday, and I have a video for that week, but I didn't include August 1st because then I would have made 2 videos, right? But I'm including it in this video. I had to go back and double check my dividends because I don't want to, overinflate my numbers here. But this is the payout that I got for week 0. I was paid $3,412 from Misty, Chippy, and XDTE on August 1st. So I'm covering that in this video. For week number 4, I was paid $2,302. That's for this current week, right? So this was a really decent payout. Again, not as high as the previous weeks because again, if you look at the S&P 500, you look at some of those high beta stock names that I was talking about, they were just ripping they were just ripping to new highs almost every other day. It was crazy. After Liberation Day 2.0, August 1st, we had that huge dip, and then just everything started taking off again. So we had some really good payouts for these ETFs. But because it seems like, the market is kind of punishing, or taking some of those gains. You have retail investors that are cashing out, taking profits. You have, large hedge funds, institutions, traders taking profits, or not even trading for this month. They're taking a vacation off into the Hamptons, I don't know, or Italy, whatever. But, I suspect that we'll probably have that as well going into September. All right. So August, even though August, I got paid in total $16,803, which is, obviously my best month ever, but I am not letting this number get to my head. All right. A lot of people, on YouTube, even Blossom or X.com, doesn't matter, or Reddit, we use these tools like Dividend Tracker, or we use, Snowball Analytics, and it spits out these really nice, estimated numbers that we're going to be getting for distributions, 50,000, 100,000, 200,000, 300, 400, $500,000. I take a lot of that with a grain of salt. Okay. Because these distribution amounts will change week to week, month to month. And as you guys have probably been seeing, again, and this is just evidence of that, when you have a really bad week, those distributions are going to get punished as well. They're not going to be as juicy as the prior weeks. All right. There has to be bullish momentum on these weekly pay ETFs for them to pay out very well. Okay. So that is just something I think everyone should be aware of. Because again, going into September, I think we're not out of the woods yet. We're definitely going to be seeing some more red in September. All right. But anyways, I wanted to show you guys this and at least go over this little bit. Because even though I got paid, quote unquote paid, return of capital, all that stuff, I get it, blah, blah, blah. But even though I got $16,000, I'm not expecting to always be paid $16,000 every single month going forward. Okay. That's just, I just don't think that is possible. I do reinvest a good majority of the dividends back into the portfolio, all right, to continue compounding this number. As you guys can see, it has just been constantly rising month over month, from March, April, May, June, July, and August. It's just been constantly growing a little bit here and there. So anyways, enough of that, guys. So that's how much I made for August, $16,803. All right. For this week, made $2,300. So let's hop over to some market news. All right, so we're going to be looking at the S&P 500 index seasonality chart. I've shown you guys this video in my previous video, or I've shown you guys this chart in my previous videos. Okay, this is a very important chart because it kind of just tells you exactly, based on history, what to expect. So, there's a lot of people freaking out, in the comment sections of Reddit or other YouTube videos, just completely freaking out. And I think just people don't understand, this is to be expected. Okay. We can't just constantly ride new highs every single day. And yes, you're getting those dopamine hits of getting paid every single week, every single month, these really high distributions. But this is a healthy thing that happens. Okay. These pullbacks, these corrections, these drawdowns, these are just healthy. This is healthy for the market. Okay. So we're going to go flat or, very volatile over August, September, probably into October, but we should see newer highs. This is going to set us up for newer highs. So a lot of people are getting shaken out right now, cashing out at lows, selling at a loss because they're losing sight, in my opinion, of what's to come, right? They're getting shaken out by a couple dollars of, losses here and there. Anyways, I just want to show you guys and remind you guys again of this chart. This is the S&P 500 index seasonality chart. Okay, we just got through August here. And as you guys know, if we scroll down just a little bit, you guys will see that August usually has a gain frequency of 55%, which means that there's a 45% chance of loss, okay, or that we're going to have a down month, right? A negative month. The max return was back in 2020 at 7%, and then for 2015 a max drawdown of 6.3%. Okay, so again, the odds are 50-50 that we'll have a really good month or a really bad month, okay? And we know that because if we look at the S&P 500, the S&P 500 is actually up for the month 1.53%, but it looks like a lot of the higher beta names, the more higher risk assets didn't have such a good month. Palantir down 1.2%. We also have Hood down 1.95%. We also have MSTR down for the month 15.35%. Again, MSTR being the most volatile out of all of them. But again, S&P did pretty well, but I would suspect, again, looking at this chart heading into September, we're probably going to have a couple more red days, probably a pretty decent sell-off, going into October before we see some new highs. Again, guys, I'm not guessing here, all right? I'm just using history and data as, part of my thesis of what's to come, right? So when we do have these really bad drawdowns or pullbacks or whatever, I'm able to stay grounded and either look at it as a buying opportunity or just I'm going to hold cash. And right now, I am personally holding a lot of cash. I'm going to continue holding cash and building up this dry gunpowder because we have the FOMC meeting coming soon, September 17th, okay? And there is an 86% chance the market is pricing in for a rate cut of 25 bips to 50 bips, okay? So that is really, really good, really, really cool. Jerome Powell was very dovish during the Jackson Hole speech. So we'll see what comes of this. Again, a lot of this can get flipped on its head. Right now, the Federal Reserve is stuck between a rock and a hard place. They're battling not only inflation, but now a deteriorating jobs market. And this would not be a good thing. If unemployment continues to rise, that would definitely not be good for the economy. And that could probably plunge or be a nail in the coffin for the economy heading into a recession. So one other thing I want to draw your attention to is the money market funds. Okay. This just came out August 28th. Total money market fund assets increased by $17.19 billion to $7.21 trillion for the week ending August 27th. All right. The Investment Company Institute reported today. All right. Why is this so important? Well, if we look at this chart, which is the money market funds, all right, your money market funds are like the safest assets. They're pretty much bond equivalents, right? They can't really go down in value at all. But what they do is they pay an interest, right? And right now the interest is sitting at between 4 and 4.25. So, you're making interest on your money. But look at this. There's $7 trillion plus sitting in money market funds, all right, or money market accounts, just sitting there, $7 trillion. This is why you have people like Tom Lee calling this the most hated V-shaped recovery ever, because this is money from institution fund managers, probably a lot of retail investors as well is lumped into this, and they're just waiting on the sidelines, hoping for a market collapse or something to happen to the market where they'll pile in. So who knows? You have stocks right now like Meta, Google, Amazon, Palantir, NVIDIA, AMD. You have all these other companies just reaching new all-time highs, and there's still all this money sitting on the sidelines earning a 4% return, whereas all the other tech stocks were returning, 20, 25%, sometimes 30%. So again, I could see why, these people would be absolutely sick that all their money is earning them 4%. Meanwhile, stocks have just been absolutely crushing it this year. So again, this is why this is important to understand when, you have inflows, like this, $17 billion inflowing into money market funds. Again, this is just telling me that there is still some type of risk out there, or some type of caution that a lot of investors are taking, that they're probably waiting for something bad to happen. So I'm inclined to at least take that data point and, apply it to my portfolio, my thesis for the rest of this year. So this is why I'm still holding a sizable position in SGov and still holding cash on the side in case I need to use it, to buy some, stocks or ETFs that go on discount. So anyways, guys, that'll do it for me for this video. I hope you guys enjoyed it. Hope you guys got some value from it. Go out this weekend, touch some grass, get some sun on your skin, enjoy life. All right. I will see you guys on Monday morning back in finance land. You guys have a great day. Actually, I just remembered the stock market is closed on a Monday, so it is what it is. I'll see you guys on Tuesday. So with that being said, I'll see you guys on Tuesday. Have a great weekend. Enjoy.